Pains from the Eurozone debt crisis continue to be felt by the Asian economies as data released today showed a significant slump in Japanese exports. A slowdown in China and Europe's debt woes contributed to a wider-than-expected trade deficit in July for Japan, while higher oil prices boosted imports. But the fragile report from the world's third biggest economy follows similarly bleak data from the export-reliant South Korea and Taiwan. A string of disappointing trade figures from Asia's export engines has added to signs of weakness across Asia and raised fresh concerns regarding global demand and recovery. In June, Japan reported a trade surplus of 60.3 billion yen, but according to the Finance Ministry, Japan reported a shortfall of 517.4 billion yen in July, almost double analysts' forecasts of around a 270 billion yen deficit. Japan's exports to the world tumbled 8.1% from a year earlier, compared to an estimated drop of only 2.9%, the largest decline in 6 months. Although imports rose 2.1% compared to a fall of 2.2% in June. Some economists are hoping these trade figures, alongside the general slowdown in demand, both external and domestic, will increase the pressure on the Bank of Japan to take more easing steps to support the domestic economy. Hiroaki Muto, a Tokyo-based senior economist, says, Japan needs more monetary stimulus to sustain the recovery. Sentiment among manufacturers is deteriorating globally, triggered by Europe's fiscal problems, and that's adversely affecting Asian economies. Japan's economy has been hurt by a combination of factors in recent times. A fragile economic recovery in the US and the ongoing debt crisis in the Eurozone, two of the biggest markets for Japanese goods, have both hurt the country's export sector, and expectations from here remain weak as downside risks to exports for one have grown. Exports to the EU tumbled by 25.1% in July from a year earlier, the biggest decline since October 2009. Domestic consumption also remains subdued alongside cautious sentiment among Japanese consumers and businesses. A strong Japanese yen has also made things more difficult. While the US dollar has been gaining momentum against the Japanese yen as of recent, the strength of the yen is still a huge concern as a stronger currency erodes export sales and profits. Back in October last year, the yen reached a post-World War II high of 75.35. Reconstruction was one of the key drivers of Japanese economic growth during the first quarter, but that has also begun to fade. Some analysts believe Japan's economic growth will inevitably continue to lose steam in the second half of this year. However, although growth expectations have been lowered, forecasts are still for the world's third largest economy to outpace most other G7 nations. The underlying growth story isn't terrible. Things are slowing, but it's certainly not recession in most of the region. I'm afraid that's all we have time for on today's Press Review, but do stay tuned to DukascopyTV. For the moment though, goodbye.